Hi, Warriors. Ren, Minot, Shepard. Just a couple of astro events today, actually. New moon today, and Saturn at opposition. Hi, Brock. So W.D. Gann followed these planetary oppositions, so I keep an eye on them. You could get a farmer's almanac. Anyone out there know why Gann followed oppositions? Because I don't know the significance of it. I watch it. I'm just guessing they could be inflection points, but there's usually a few. Yeah, I can't remember anything significant happening at the last one at Jupiter. Um, but Saturn in Roman times, they associated Saturn with melancholia, depression. So this is how we avoid the depression by capitalizing on the market. So let's get to them right now. I was looking at EG, looks like it's a failing rally here. We tried to bounce and couldn't get through the 61.8 level again. Could be wrong over the 61.8 level. Don't do it 1 pip above this high. Okay. When you enter trades, ask yourself where are the stops? And even if you're using a swing high, give it tolerance because everyone has their stop 1 or 2 pips above it. I'd say if it's a stop hunt, it really shouldn't accelerate more than 30 above in a higher low, then something else is going on. So this is really a big week for the dollar. I'm not sure. I'm sure I'll get it from the team. The news flow out of that meeting of the European Union. And Friday, we held this low right here, 72. Friday, the low was 78. So let's see, we haven't quite taken out the stops yet. The low is 73. So still haven't taken out the 72 stop. And I'd say that a lot of people are looking at this trend line. See this trend line? So a lot of people are saying we're on the verge of a breakdown. Although, if you were bearish, this was really the breakdown back here. So it's kind of been a grinding decline. It hasn't been filled with big acceleration. I don't see anything here that is impulsive in the dollar. It's more like chop. So this is what I did. Maybe you could do the same. So I drew a line, just a horizontal line off this low, and it'll come in off this low and this low. So, uh, I could see us going into an acceleration phase that would take us, down to 92-ish down here. But the type of decline we've had and some of the things I'm looking for in outside markets, I'd be totally wrong if that's what's going to happen. If we're going to 92, gold's going to 2000, which I don't think it's going to do right away. S&Ps are going to go above new highs, and everything's going to rocket with a weak dollar. So what I'm thinking is when I look at some short-term stuff, we're not confirming. It's already trying to make a little turn before it's gotten down there. So I'm thinking that a conservative way of playing it is, maybe today we close underneath the double bottom here, and the bottom all the way back there that I showed, and then closes back above it. Like say we trade down to 95.40 or so, something like that, and then we start closing back above 95.75. Then I think you got something. Month? Sure. Really ugly month, pretty ugly chart at this time, and we're heading into the end of the month. For the monthly to turn back up before the end of the month, a 2-month reversal would take place at 98.30. Does that help you? Negative unless we finish a month above 98.30 on the two candle close reversal. And that was a pretty important area. You know, we tried it almost right here. This 97.80. So the 98.30 is this low. So that's pretty important too. Very important. In fact, getting back above this breakdown would really be bullish. Okay. And gold, still waiting for gold to make a new high. Hasn't accomplished it. This is what's kept me patient. And, you know, if I wanted to scalp the long side, I could do that until we make a new high. I don't think that will confirm on multiple time frames at new highs. And this is happening with silver making a new high. And this is happening with silver making a new high that the gold silver ratio is in a third drive. Okay. So here's 1, here's 2, here's 3. You could probably see a little better here. Yeah. So we're diverging on this. Let's look at the monthly. You know, we're back to this previous high, but we had a pullback. We're back to a breakout area here. Then it'll go down again. Okay, thank you, Nostra Cone. And so, you know, a high risk trade because, you know, there's no guarantee it's going to stop. Maybe just collapses here, but I was thinking there could at least be one correction in the gold silver ratio. Really haven't had a decent one from the 128 level. So this is 3,600 points, 18 back, takes you to 110. And if that turns out to be correct, gold will hold up better if there's a decline than silver will, and silver will begin to underperform. I think the market has woken up in the last 4 or 5 months to silver. Yeah, anyway, so we'll see what happens. Still waiting for gold. Gold, I'm thinking maybe at least new highs. So I'm on alert after we make a new high in gold, which I think was what 1820. It was this high right here, 1814. Only divergences right now. Okay, a lot of people are going to be calling this a breakout. So it all kind of ties together and should tie together with stock indexes. Nasdaq stronger than S&Ps today, but this key reversal I think will stand even if we rally back to 10.8, 10.9 here. I'd be looking to sell it, and if that happens, we're going to get a new high in S&Ps and maybe a level that a lot of people are looking for, and that would be about 88.886 comes in on my fib 3257. So thinking there could be a lot of things to fade tomorrow. And of course, it won't have anything to do with a planetary opposition or a new moon. That's just, you know, stuff to think about, not to trade on. Okay, so hope everyone has a good week. We have a nice interview with Mark Newton. If you're tired of just seeing snippets, okay, of the guys that we have on, like Peter Bookfire was on last week. You usually hear what he says about 3 to 5 minutes worth. Same with Mark when he's on. So we're going to have half an hour to pick Mark's brain into this recovery in the market, etc. Does he think the metals are Still have plenty of runway, and Mark also does some pretty interesting cycle work too. He called one out pretty good that I was able to take advantage of in his last interview. So stick around for Mark Newton, CMT, and you know what CMT stands for, right? Okay. So Blake, how was your weekend, man? And what are you thinking with Euro? Were you what's the news? Doesn't seem like it was that dramatic with us being up 22. Or are they still working on a compromise? I was reading something about there may be a
They are.
compromise.
They
Yeah.
are. They are. They're still trying to nail down a deal. I mean, they went until 4 o'clock in the morning last night,
Okay.
and then now they're reconvening today. I mean,
Okay.
it looks like to me that they're going to, in the way that the euro is acting right now, it seems like that the market is just assuming they're going to get some sort of deal, and I mean, that would be that seems to be like the general consensus. And
Yeah.
as I'd mentioned in the, I don't know if
Only
I
a
mentioned it here.
watered down deal
It
is
doesn't matter. It doesn't
good.
matter. It doesn't matter if
Okay.
it's a watered down deal.
Okay.
When you're taking the European Union, that's, you know, this huge group of, of of European leaders and European countries that come together and just, can agree on something that's big, and that's what the market's looking at. I mean, yeah, it'll come in probably shy of the loan and grant portion. I think they're trying to do 375 billion, which is, not the 450 that originally the market wanted. But again, that's not the point. The point is they're going to agree on something, and that solidifies the idea of some sort of fiscal union that everybody in the European Union is chipping towards. And one of the big fears of the euro dollar has always been, is this just a fad? Is this just a thing? Is it even going to exist in 10 years?
Yeah,
When
because
you
it was just monetary union.
Yeah, exactly. So when
Yeah.
you have a fiscal union and you have everybody's, hey, everybody's got one common goal here, that's what's really powering the euro. And you know, do, do I
I
think
remember what
that,
that used to be like here in America.
huh?
I remember what that used to be like here in America when we could all have one common goal.
Oh, yeah, you mean before the Civil War? Just kidding.
Yeah,
Joking.
just after.
Just after. All right. So, but in all actuality, that's why the euro, and one I want to. Well, I'll pull up this chart that I see if I can grab it really quick. Let me pull up this. This is pretty interesting. This came from a research report I was reading a little earlier. Um, this is why did that come up? Huh. I wonder why that's dark there. There are. This was from a group that we follow, and this is just a Fred chart, just showing the liquidity, how many dollars are in circulation. And there's
Wow.
24.9% more dollars in circulation today than there were 24 or 12 months ago. So if you think about that, the M2 money supply, how many dollars are out there, then you have this fiscal union that the European Union is trying to really piece together. Why shouldn't the euro be trading at 115, 120? You know what I
Yeah.
mean?
Yeah.
But then you think about all the other dollar pairs, and
It
that's where,
certainly hasn't done anything wrong yet all the way up.
no,
Euro, you know. It hasn't given you a reason to
no,
go
and
bearish.
and a lot of people will say, well, how about if we have some, risk off? Will the dollar strengthen as a risk off type of currency? And as I said, I think I said this on Friday. It might have been on Thursday on the daily roundup. You have to be a Forex Analytics subscriber to listen to those Monday through Thursday. But what I said is, I believe the dollar is going to continue to stay weak, even if equities sell off a little bit here. I don't think the dollar is going to gain strength. The reason why the dollar gained strength here is because the shutdown was it was such a big deal, and it was so shocking to so many people. And, equities sold off aggressively. The dollar rallied as a result. It, and so, if the S&P implodes and we drop back down to, let's say 2000, and we go quickly, like we do this, we pull another one of these, the dollar is likely to gain some strength, right? But it, if I personally think that the stock market may come down and we may do this still. I don't know if it's going to happen right now. I'm just saying that this is what I think the market's at risk of, is actually pulling back, but not like this. It's going to be more gradual. And if that's the case, the dollar will probably stay weak. The dollar can weaken in periods of risk aversion as long as it's not aggressive. It's when the market gets freaked out, when the market gets, panic stricken, that's when the dollar really gains some strength. So anyway, that's just a little bit of a blurb about the dollar. But let's, I promised you guys last week, and I'm going to continue on. We're going to develop this, the bias chart. So let's talk about the euro. The euro continues to move higher. We are above what I consider is key right now, which is above this 114.20. And as long as we continue to stay above, this 114.20 level, 114, I would say support right now is the overnight lows at 114.10. Then, oops, hold on. 114.10. We remain bullish, and the next stop for the euro, in my opinion, is 115, and 115 is going to be key because that is the spike high from right here, the March. I guess that's March. What day is that? March 9th, 6th, something like that. So that's going to be 115, and then also that's 161% extension, just so you guys can see it, of the last move lower. That'll take us to 115. All right. Okay. So there we go. Let's talk about the cable. So the cable, this is a big deal. The pound this is the bias chart or bias chart. This is our chart of the day from the blog a couple of days ago. 127 is the 200-day moving average. This downtrend line now comes in at 126.50. I think that is going to be really key resistance on the way up. Hold on. Okay. Oh, silver's ripping, by the way. Silver is ripping. Okay, so 126.50 I think is good resistance. 127 is really key. Okay. And a breakout above there and we become bullish. Now, one of the things I want to bring up about the cable is that if you look at the pullback coming out of this wedge, it really was maintained at the 38% retracement. So my opinion is, as long as we stay above this 125.20, it's bullish. But let's talk intraday support. Intraday support, if the cable gets back down here, which would be 125, let's just call it 125.75. That would be pretty well supported. 125.75. Okay. Just in case it does. Let's talk about the Aussie. Aussie is just, we're grinding. In my opinion, the Aussie is hard to read here. And the reason why I say that is because we are above triangle resistance, so we're not really breaking out. I mean, I guess the easiest way to identify to read the Aussie is it's bullish above 70.60, which is the spike high right here. So I'll write down 0.7060, and that is key resistance. And I still think it's bullish while we're above the 69. Oh, right here. While we're above 69.20. So 69.20, bullish. While we're above that, Kiwi right up against triangle resistance. You can see triangle resistance here, triangle support here, big cup and handle developing. While we're above 65 cents, it's, oops, excuse me 1 second. While we're above 65 cents, I still think it's bullish. 66 cents is resistance. Okay. Let's see. Let's go over to the dollar Canadian. So the dollar Canadian, this is the one that I think is still holding up pretty well. Dollar Canadian is still below. See this pink trend line here, this one right here. I think that's capping the dollar Canadian. So is this horizontal resistance. So right around 136 this morning, and actually the highs this morning is 136. So I'm going to write down 136 as resistance. And support is at 135, which, if you guys don't recall, this is the 200-day moving average as well. So that's support. That's support. Okay. Let's go over to the peso. See, the peso, this is one of those currency pairs that, I mean, it should be, like right now should be the time that we short it, because it should stay below this trend line. But at the same time, as if the dollar decides to go bullish, this is where it's going to go bullish against, right? So
could it be smelling some risk off coming here, Blake, if it breaks out?
It seems like it. Yeah, I mean, it's hard to. I'm going to say 2265 is resistance, and support. I mean, if we break through this triangle support, which comes in at 2230, then it turns bearish. But
you get some.
It's really,
you get some nice carry if you short that, so that's an extra incentive.
Yeah, I mean, if there's any carry left in the FX market, it's in some of these emerging market currencies. That's correct.
Yeah. Good morning.
Let's go into the Swissy. So Swissy support comes in at 93.60. 93.60 is support. Resistance 94.65. I want to be bearish the Swissy just because we've come out of this triangle, but it's this is some pretty key support down here. You can see how we're just holding these levels. So US dollar, Norwegian krona, this is one that as long as we stay below 934 920 should be coming up. It is bearish. Dollar index, dollar index is, this is really just, as you can see, we're just brushing against key support here. It's 95.70. We break 95.70 and it would be pretty bearish. So 95.70, and the dollar index, while we're below, you can see the trend line right there. This is the resistance zone. So while we're below 96.40, it's bearish. Okay. Dollar yen. The dollar yen during the Tokyo fix, it screamed right up to this 107.50 level. Amanda shorted it up there. I was thinking about it last night. I saw it, but I was watching a movie with my family, and I didn't do it. I didn't pull the trigger like a wuss, but I should have. 107.50 is resistance. 106.60 is support, and that's key support, by the way. 660 is key support. Then I'm going to leave you guys with gold and S&P, and then I'm going to give it over to Stelios and Steve. So here's the S&P. Resistance, or excuse me, support is at 3190. I think this is exactly the same thing that we talked about yesterday. Or Friday, sorry. 3190 is support. Intraday resistance is at 3240. I want to say it's 45, but I'm double checking the numbers here. I mean, 3242. 3242. This is bullish. And gold continues to be bullish, guys. We tried to break support, couldn't do it. Resistance 1818. Oops, 1818 is resistance. And remember, we have to break below 1790 to even take the downside pressure off. So it is bullish. So there's your bias chart. And it's all ready to go. So there you go. And good morning, Steve, Stelios. How you guys doing?
Good morning.
Good morning.
Good morning, guys. What do you think about this this European Union
Shenanigans
that have happened all weekend? What's your thoughts? What's your thoughts on that?
We were saying on Friday on this webinar, what is the goal of the European Union? Well, the goal is for them to become bigger and stronger. That's why they're trying to attract more member states. And actually, I think that's one of the reasons why they've given the UK such a hard time, just to show to every other nation that, look, this is what's going to happen if you try to leave. But anyway, I think their goal is to be bigger and stronger, and you're not going to do that by showing difference, and not agreeing on things. Obviously, this is a very difficult thing to agree on. There's a lot of moving parts. We have the frugal four who don't want to be giving away money for free, at least, and you have a whole lot of other countries who need it. So in my opinion, they all know that they need to agree in the end. They do know that, but obviously each side is trying to get the most that they can for their own, it sounds egotistic, or however you want to call it, but
Still, besides Germany, who's the other three frugals?
The Netherlands is the big one, apparently. The Rutte, or whatever his name is apparently giving the biggest fight. And who else is it? It's Austria and Finland. Denmark. Finland is no longer one of them. But anyway, it's a difficult situation. We got all these comments today from Merkel, from Macron, and they're quite contrasting. Some of them. Merkel was very positive. Macron was actually quite negative. What do you make of this? Sweden, yes, Sweden. Somebody's writing, but anyway, there's 4 or 5 countries which are very frugal and prudent, and the rest are not. So we're getting a lot of comments here and there, a lot of contradictions, let's say, but in the end, I think they will have to agree on something. Is it going to be 375 billion or 350 or 400? What form is it going to be? It doesn't matter. Just like you said, Blake, very correctly. I think the main thing is to show that they can actually, for once, agree on something.
Right, and become a union where everybody's chipping in, everybody's got a skin in the game, if you will.
Yeah.
And so yeah, I mean, based on the euro price action, it looks like the market's starting to price it in. But between that and then you have some pretty positive COVID vaccine news. You've got stocks that continue to hold up pretty well. I mean, I don't know. It looks like right now the path of least resistance for the dollar is down, and it's not just the euro. It's the cable. The Aussie is knocking its head up against. I mean, look at this is a big deal. You look at the Aussie. I mean, this is a big false breakdown on a weekly chart. The Aussie looks like we're heading back to 80 cents. And you just sprinkle a little inflation, around the globe a little bit. this Aussie is going to be, ripping, and that's what scares me about gold. I mean, gold looks like it's going to, gold looks like it's going to 2,200 pretty fast. So, Steve, how you doing this morning?
I'm good, mate.
Good. How do you feel about the EU meetings over the weekend?
Deja vu. That's how I feel. Don't forget that we Greeks, there was a period that there were a lot of meetings, around Greece. I've seen how they work. I know how it will end. They will come up to some kind of a deal. Now, in general, I don't have a very positive opinion of how all these things work. I think that many of these institutions are created by people that just want to have, government and power, and I think that they create a lot of economic friction that eats up a lot of resources without producing, really an equivalent result. But this is a big conversation that we can, have at some point at the dedicated webinar. Now, having to do with the union that you mentioned,
Steve
we know
Volge for president.
we know which are the countries that actually contribute, and we know which are the countries that will actually eat up the resources. And it's easy for me to say because I'm Greek, which means that somebody can't accuse me since my country is definitely one of those that will be consuming the resources. But still, I'm against this whole logic. It's perverse. But we live in a world that functions in a way that economics, from an economic perspective, that makes no sense whatsoever. And I don't disagree. The market is going to see an agreement, which is going to happen as a positive. And what we have to care about is what the market thinks and how the market reacts.
What do you think throwing debt, money, i.e. debt at the problem is not a solution? Come on, Steve. I thought you were smart.
Yeah, I'm so backward thinking, right?
Well, it's interesting to hear, Europeans' perspective on this, and so I just find it really fascinating, and I think today is going to tell us a lot about the future of the EU. But I have to also admit that the euro looks pretty bullish right now, but things can change. Guys, I'm going to pass it over to you and let you take over and cover some of these cross rates and other things as well. So, Dale, I want to say enjoy the interview. I love Mark Newton. I think he's probably one of the better technicians out there. From you guys, for those of you that don't know who Mark Newton is, he's awesome.
Unlike he's not Isaac Newton, but Mark
he is not Sir Isaac Newton. No, that is correct. But you guys have a great trading day. I'll see the rest of you in the chat room, and then Steven Stelios, I'll pass it over to you. So, all right, guys.
Thank you, Blake.
Good luck.
Have a great one,
Blake.
Thank you,
mate. I have to agree with Steve, even though I'm Greek. If I was in the side of the Netherlands or Germany, I would have a problem, giving away money, because it's countries who are very prudent, who have been fiscally prudent and have reserves, and why do you just give it away? I've said this for a long time, and I've argued with people. I said from the beginning, this European Union project was very interesting when it started, because the main thing it did was it facilitated free movement of people, capital, products, and services. And that was brilliant. This was the main idea behind it. And then they went and they did a single currency, and then they just complicated things a lot. And I've been saying for a while that in my opinion, the only way this thing can really work in the European Union is if they do something like the States, where you have deficit states taking money, direct transfers from surplus states. And that is going to not fly by, Germans and
why would it?
Whatever. Yeah, exactly. So
it's very easy. I mean, if you are Portuguese, Italian, Spanish, Greek, and a few more countries, it's easy to say that the other ones are like
cheap.
Yeah, that they're cheap, that they don't care about the common good, etc. I want to see what they would think if they had to reverse things. You know what I mean? If they were in the countries that created like surpluses and underconsumed for long periods of time, so they can actually create savings and invest. Because it's very easy to say that the other ones are not, playing as a team, if they're the ones that are requested to sacrifice, right?
Yeah, that's
to
true.
take the burden.
Yeah, and
So
you have
yeah.
countries. A friend of ours is writing the last four fiscally responsible countries in the world. Well, you have other countries like Norway, which I love, and they have like $1 trillion in reserves, which is quite nice for a population of what, 5 million. And yeah, this, I think, to summarize, I think we're going to get a solution, some kind of a solution. Will it be good? Will it be bad? It doesn't matter.
I don't think the market even cares at the moment, Stelio. They just want to see that, this chapter is going to be closed one way or another. I mean, in all honesty, okay, what's the difference if it's 375 billion or 400?
Yeah.
I mean, at the end of the day, what's the difference that will really move the needle? You know what I mean?
Yeah, and once you start, what's to say that if things continue to be bad or get worse,
exactly, you won't have like a second package that they will renegotiate with extra X amount of billion. Yeah.
Speaking of which, we have the Americans who are going to be voting. I think, actually, no, they're going to be meeting in the White House today for a plan. They Mnuchin and I think Mitch McConnell as well, and they want to produce another plan somewhere between $1 and $3 trillion. So, like we said, you start with this, you have to follow through. Otherwise, if you just let it go, then everything's going to crash, right? I mean, it goes without saying. So
yeah, and in a few days also because don't forget, in a few days the how is it called, the 600 per week extra unemployment benefits thing called, that expires.
Or whatever it's called.
Yeah, that expires as well, and there is no politician on the planet that would let that expire ahead of elections, especially. You know what I mean?
Yeah.
So I'm pretty sure that one way or another they will extend something. I mean, if not the same kind of program, something which we've explained that before again and again. I mean, this is destructive. Compensating people, a lot of people, more than they got paid to work, to have leisure time. It's it's completely insane. I mean, from an economic perspective, it's destructive. But the decisions are not based on economic logic. They're based on political
interests.
Interests, and that's how it was, that's how it is, and I'm afraid it's not going to be easy to change.
Yes, so the solution is we throw more money at the problem and see if it can go away eventually. Meanwhile, ignore the debt that's piling up every year.
Until it stops getting ignored, and then you'll have to face the music.
What else do we have? We had data-wise pretty much nothing. We do have today the results from this Oxford vaccine, which are expected, if they're not out already. I didn't read anything, so I think they're out a little bit later. From what I've been reading, this is like a test on 1,000 people to see how that this is phase 1. Now, I was reading about this, and obviously we are nowhere. There's zero chance that something's going to be ready for this fall and winter. I think that's a given. The question is, we're in a race to have something ready by next year. So, the market needs to realize that. Obviously, the market thinks, and I read everywhere, oh, this coronavirus is over, and everything's going to be back to normal. I hope they're right, but until we get actually some kind of vaccine, or I don't know what.
The market is in the mode that the coronavirus issue is going to be solved at some point.
At some point, yeah.
And until then, all the economic damage that has been done and will be done is going to be plugged in with a band-aid called monetary stimulus.
Yeah. Anyway, let's see. Nothing else has changed in my view. I am still very cautious. And even though risk assets seem to not care about anything, and any kind of dip is bought straight away.
Yeah.
So that's
Any real um, headline that came out and caused the cable failure, since you're closely monitoring it, to overperform today? Because at some point it wasn't doing that well today, and now it has done some catching up.
I personally
With
didn't see anything. I
yeah, me
think
too.
it's
That's why
just
I'm asking in case you
I
did.
think it's just market movement, just
Yeah.
positioning stops everything.
Yeah, I
I don't know.
mean,
Maybe
I kept saying that the previous week that people should really not expect that the two of them, meaning the euro and the pound, can really move in opposite directions. It's impossible for that to happen. I mean, yes, one can perform better than the other or worse than the other, on a relative basis. But if there is anybody that really expects that one of them can be going up and the other one can be going down, they've obviously haven't really seen how these markets move. So euro remaining well bid more or less guarantees that the cable can't be doing that bad. And speaking of which, that's a good segue. We've had quite a nice day so far in the cable, which is now testing this triangle's resistance. This looks to me like a bullish consolidation, so I would expect that the cable would eventually break out from this formation, and by eventually, probably, I mean, sooner rather than later. I mean, probably this week. In which case, I would expect it to push towards the previous high, just above 128, and why not even a little bit higher, where we get this long-term channel trend line resistance. Passing through. Currently, what is it? It's like 129 and change. And, I think that's going to be like a key area for the cable to prove if it actually wants to produce something worth mentioning on a long-term chart, or it remains in this broad, descending channel, which is a bearish pattern. Although I have to say, as I was saying with the euro, that especially when we were at the lows, I mean, there was no risk reward in being short the cable. I mean, the market was already pricing in a lot of negativity, and the market was completely ignoring a lot of risks that surround the US dollar. Same deal with the euro. The euro just made the move earlier. It's currently attempting to break through this. It is above it for the time being, but let's see how it closes another week above this long-term descending channel. I do think that there is a very high probability that this whole time we were building some kind of a rounded bottom, and I do have to say that I'm constructive the euro, as I'm quite negative the dollar, and obviously the dollar index. We've seen the dollar underperform, and as Blake said, unless we see like some huge move down in risk based on fears that might even surround the soundness of the financial system, I don't think that the dollar can really sign. I mean, yes, if we see risk of the dollar will get beat, there is no question about it. But do I think that it can really reverse higher and you know um, punch through the 100 level again and test the highs? I very much doubt it. I very much doubt it. At the end of the day, all this money printing, this huge expansion in the money supply, I mean, it has to matter for something. It doesn't yet matter as much as it should and as it will in the not so distant future. But I think that, a lot of market participants have started being a lot more cautious, having to do with, being exposed to the dollar. And I think this is probably just the beginning, and this has the potential of spiraling out, and what currently seems like an orderly move lower in the dollar can really develop in a disorderly sell-off of the dollar. Anyhow, we're not there yet. Now, as Blake mentioned, the euro might be on the move. The cable might be attempting to do so. the Aussie remains still trapped in this triangle, which is quite interesting given what's happening with risk assets. But, irrespective of the fact that we haven't made the move yet, which, somebody would expect that we should have seen this happen, you can't really, on the other hand, be negative. I mean, this still looks like a very solid horizontal consolidation coming from a move higher. Given the fact that the risk is bid, I don't think it's a smart thing, fading this move. Here's the Kiwi as well. There is a little bit of a difference, obviously. Kiwi has already broken above the triangle, although somebody can make the argument that, perhaps there is a bigger triangle we should be watching here, something like this, which, makes sense. So this might be the triangle we should be looking for here in the case of the Kiwi. There it is. So, there is a very decent chance that both of those are going to make, at least one more move to the upside. As you see, quite a similar formation here in the Kiwi with what we see in crude consolidating in an ascending triangle. I still think there is a very decent chance we're going to see another leg higher. We have the 200 daily moving average at 42.50. That might act as a magnet. We also have the 61.8% fib at 44.80. I do think we might see one more thrust to the upside before we see some type of a deeper correction. Of course, that will coincide with some kind of correction in equities, which is long overdue. I mean, even if you are like the most devoted bull, you'll acknowledge that this move higher has been quite brutal, is overdone, is overbought, and even if you're really bullish, you would be hoping for some kind of a corrective pullback for the market to, in essence, rebalance somewhat before it can more freely move to the upside. So clearly what's going to happen here with crude is going to be tied up with the fates of stock indices. Now, having to do with gold and silver, gold is once again approaching this confluence of resistances at 1823, 1824. 88.6% fib from the all-time high to the multi-year low, and 161.8% extension of the last pullback. So nice confluence there. There is no doubt gold has been clearly losing its upside momentum, but in big uptrends, that is not enough in many cases to call a high, because we've seen indications of momentum loss several times in gold and silver, and yet they haven't turned lower.
Is there anything impulsive in the nature of this advance to you, Steve?
Let's take it oppositely. Is this advance corrective? I don't think it is. I mean, we've moved from 1,160 2 summers ago to 1,820 in 2 years. Okay. And we've had either periods of consolidation with minimum retracement, or sharp but short-lived corrections on the way higher. So, would I be fading this? No, I wouldn't. Okay. And silver, there is an extra argument to be made here for silver, because silver is also currently breaking through a multi-year descending channel. And, if we manage to actually close the week above it, that's going to be a big argument that this is like a long-term move that's going to have that's going to have follow through. Of course,
if you were short gold silver ratio, would you be taking profits on it?
Uh, Not really. I mean, we seem to be trying to break through an important support area without,
Yeah.
having much trouble. So, if you were short, I mean, you've already made like a killing here. But I don't see any reason why we would stop. Yeah, at some point we will need to produce some type of rebound, right?
Yeah.
And usually, that would be expected to come when both gold and silver pull back. So,
Yeah.
from that perspective, and given the fact, for example, that silver has already made a move from 11 and change to 19 and a half, which is like a huge, huge move percentage wise. This is 75% move higher in 88 trading days,
Mhm.
which, mathematically speaking, is something close to 1% higher per day on average for 88 days, right?
Yeah.
I mean, yeah, it's it's
Hey,
kind of a huge move.
Ariel, what guest are you talking about in chat who talked about July 22nd? Just curious.
Since you're talking about the chat, somebody asked about USD-SEC. I've said many times that USD-SEC, in my opinion, frequently leads other dollar pairs. Just look at it. Remains
Yeah.
clearly in a downtrend, right? We
Yeah.
we rode this channel's trend line resistance for quite some time, and we've now accelerated lower once again. Tested earlier today the 127% extension of this last bullish leg higher. I have to say that it still looks very bearish to me. And I think there is a very high probability scenario that this high there, same deal with USD NOK, by the way, this high that we saw in March might be, a long-term high. Who knows? Perhaps a generational high. So in that context, I think that rallies should be sold, both in USD SEC and USD NOK. Okay. I mean, fundamentally speaking, there is not even the possibility of comparing these economies. I mean, the Norwegian economy, the Swedish economy with the US economy. I mean, from a fiscal perspective, it's, like comparing, uh, like, Real Madrid team with, local Greek team. I mean, it's a joke. I'm super bullish if you're asking me long term the Norwegian kroner and Swedish one against the dollar. No other way to look at it. Yeah, apples and oranges are a lot more similar to these economies, Joe. So no, that was not the wording I was looking for. Let me go back to your questions and have a look. Yeah, you're talking about the frugal four, the decision. As I've said, I think it's not, at the end of the day, it's not going to make much of a difference the amount on which they're going to decide, and I'm 99.9% sure that they will decide on something. Now that it's going to have asterisks, the amount might not be the exact one the market has in mind, etc., etc. But they will leave there with some kind of a deal. And I think at the end of the day, the market is going to focus more on the fact that there was a deal than care about, the details of the deal. Gold, silver, platinum. Yeah, we had a look at gold and silver, but not at platinum. Listen, platinum has broken through this channel. I mean, I said it many times. This channel was clearly corrective. It broke through, it pulled back, it started, riding this broken trend line resistance as support. And, above it, we seem to be remaining well bid. On the other hand, there's an argument to be made about the fact that we have the 61.8 of this move lower and a little bit higher, this confluence of resistances at 875 that, might prove quite tough to break through. So I would have to say that, between this trend line resistance now turns support, and 875, I would more or less maintain a neutral bias, but above 875, I would turn really bullish platinum. So that's my point of view. Now, breaking through this channel once again, I think that's going to be a bearish development. Okay, so, I just gave you in essence, the zones and, which define where I'm neutral, where I'm bullish, where I'm bearish. And we're currently in this, within this rather tight neutral zone. Okay, so I wouldn't be doing anything where we currently are, but I'm closely paying attention to platinum, and I have to tell you that from a fundamental perspective, I think that platinum remains very, very much on the cheap side, and I think that longer term speaking, if you could do, if you had to do something and then close your eyes and open them again in a few years, I would not even consider it. I would be a buyer. Okay. So if I had to do something and, hold on, my trade for years, I wouldn't even consider it for a second. I would just buy it. Volumes are getting lower in gold. That's true. As I said before, there are several signs that point to a move lower coming in gold, silver. Now, I'm not arguing against that. I'm not arguing that we're probably getting close to some kind of a pullback in those metals. Yes, we are. But I can point to equivalent signs being there even 2 months ago, 3 months ago, 4 months ago. And still, that wasn't enough to see any real pullback. Right. So what I'm saying here is, yes, there will be a pullback. Chances are that it's going to come soon. The important question, though, to ask is, do I want to be in the short side of that move when it comes? No, personally, I don't. I want to be in the long side of the next move that's going to follow that move. So simply put, I don't want to fade strength here, although I know it's probably coming. I want to buy weakness. I wouldn't be against anybody that wants to be selling it and has a specific plan in mind, as long as the risk reward makes sense and you can afford it. I'm just telling you that my personal plan is different. I want to buy weakness. I don't want to sell strength in these metals, because I do believe that the environment remains extremely supportive for monetary metals. So I do think that, we're going to be much higher at some point in the near future, and I don't want to fade this. And to be fair and to be honest, probably the same applies with stock indices due to inflation, right? And I'm using the traditional definition of inflation, which is the expansion of money supply, right? So inflation is, even if it doesn't manifest in retail prices, we've already had the experience, and we know that at the very least there is no disagreement that inflation does work beautifully with asset prices. Although I still maintain my belief that in this case, this time, that they've really overdone it, inflation is not going to stay at asset prices, but it's going to spill over to retail prices as well. Not yet, at a later phase. How can you trade XAU, XAG short? Is this allowed by broker Pepperstone? I'm not 100% sure. I would think so. I think they do have spot gold and silver, so you can short them. I'm like 90% sure. But the easiest way for you to answer any of these questions is go to a reimbursement program. You can live chat on Skype or email our guys at Forest Park FX. They work with all the brokerage firms, and they're excellent at what they do, and they can answer all these questions. So instead of me, assuming what the answer is, I think it's the best idea that you contact them directly.
And tell them Steve sent you.
Sorry?
And tell them Steve sent you.
No, no matter what you tell them or you don't, I can tell you that
No, you come on. You want to
they're excellent at
make
what they
sure you
do.
say Steve sent you, so
Yes.
Steve could he gets bigger rebates when they.
Yeah, of course I do. Right, not. Yeah, I would send anybody to Justin and Trent simply because they are the best in the industry I've seen.
Yeah.
As simple as that.
You know who else is one of the best in the industry?
Yes, let me guess. Mark Newton.
Good segue.
Yep,
He's
exactly.
pretty good anyway.
We also have a teaser from tomorrow from Kirk Spano, another one that we love.
Kirk,
he says the USD will stay firm and US will export inflation. Kirk, probably you weren't on the webinar on Friday. I spoke about that. Specifically, we had a conversation about China where I explained that one of the useful functions of China is that in essence they import a lot of the inflation that the US produces. So I don't disagree with you, meaning a lot of that inflation does get absorbed by foreign countries due to the fact that the dollar is the world reserve currency. So no disagreement there. Now, if it's going to remain firm or not, I'm a little bit skeptical about that. But let's see what Mark has to say about it.
Yeah, and let's at least
you have a great
let
segue.
Kirk do his interview.
Yeah.
Before you give it all away.
Okay. And no, I'm actually, I'm actually going to try to be here for Kirk's interview tomorrow. I want to see what he wants, what he has to
Mark.
say. I mean, he's great.
Go ahead, buddy. Welcome back, Mark Newton.
Okay, he's unmuted.
Hello, Mark. I hear you.
Now he muted himself, unless you muted him. Mark,
Hi there. Can you hear me now?
Yes, yes, we can hear you.
Hi there.
Hi. Mark. Welcome back.
Yeah, thank you. Happy Monday morning to you all. I appreciate you having me back.
Yeah, I hope you and your family, loved ones, everyone remains untouched by what's going on. Everything okay?
Thank you. Yes, as of now, yes.
Okay.
we had a close scare, but we were tested last week, and everybody's negative, and so we all move on. So
okay. All right. So what's number one on your radar? What's this? The Australian market where you have that wave count? What is it?
Let's see. There's a couple different things I want to share.
Okay.
One is I think you're on the middle screen here. So you see this right here?
Okay. Now, yes.
So this is probably what I view to be the biggest development in the last couple of days, in that you're starting to see a return to defensive sector rotation, which really has been absent over the last couple of months. So this is just a relative chart of the utilities versus the S&P.
Okay.
And so, to me, that's sort of important. I think last week in general was one of the more significant periods of sector rotation that we saw since the middle part of May.
Yeah, with the NASDAQ 100 peaking and not making new highs, while the S&P did at least once last week.
Yeah, the S&P and the Dow and really the Russell 3000, which I use as a larger gauge just for the broader market. I mean, all of those remain right up near the the peaks that we've seen since the early part of June. Now, what's interesting though is that we saw a pretty big sign of technology pulling back. This is just an equal weighted chart of tech versus the S&P that really, you can see that this peaked out almost a month ago, right around June the 8th. And that's when the Russell 3000, that's when the Dow Jones Transports peaked out. That's when the S&P and, largely the NASDAQ 100 has moved on to new highs, whereas many of the indices, particularly on an equal weighted basis, have not participated. So, it is a strange market. I do think that breadth actually got a little bit better last week, and that's a good sign. We did see some pretty encouraging movement out of sectors like healthcare, which are certainly very significant. Healthcare is the second largest sector in the S&P behind technology. So to see this move in healthcare finally is really interesting. This means that other sectors potentially can step in and pick up the slack while technology consolidates and potentially keep the market hold it up at least for a little bit longer. But the longer
Okay.
term chart on XLV shows you, any move up to 109, 110 is likely going to be very important and likely cause us to stall out. So, I am more short-term bullish on the group, and I think the moves in transportation last week up 6% were important. Industrials, financials, materials, most of those stepped in to pick up the slack. So for me, those are certainly very encouraging signs. S&P now lies at a pretty critical juncture with at least one small cycle that I'm looking at that's about a 26 to 27 day trading calendar day. Trading day cycle. It's right around 37 days. So this hit back in the latter part of April. It hit on June the 8th, and it should be happening, potentially the early part of this week to cause a stalling out.
Okay.
But, I'm in general, I'm constructive really into the middle part of August. There's a really big time zone for trend change. It comes in, should be right around August the 19th that I think is important. It's related to the peaks that we saw back in February of this year, as well as the rotation that started in mid-May.
You know when the low in 1982 was made?
Right around August the 9th, I think, right?
I think, right in, I think August 22nd. August 20th,
okay.
Right around that same time period. That's why it rang a bell to me. Has August popped up to you for you and your work more than once? Is this an unusual kind of time of the year? I know a lot of people looking for weakness into the fall, and it's only a month away from the fall.
Yeah, I don't know. I think that the rotation for me is still pretty good. So I'm thinking that any near-term weakness we see this week, and I think there is a possibility of that would still be something to buy into, and that August is really going to be important. So you see on the left-hand side of this chart, all these different lows that were made. This also happened back in August, and this was a pretty pivotal turning point. So not only do we have a 1-year anniversary, but we have a 180-degree and/or 6-month anniversary from the February peaks. And we also have a 3-month term potentially from the 14th of May. So all that triggers in mid-August to suggest that could have some importance. So
what's the cycle based on, Mark, if you don't mind sharing that, the cycle in August? Not a Bradley date or anything like that, right?
There are some Bradley turn dates in August, and a lot of this is just based on the works of my interpretation of Gann theory and really what's going to be happening. And, it's always important to pay attention to, 3-month and 6-month anniversaries of prior turning points. And when they happen to line up in this case, we have one of the more important turning points of the last few years, which happened, right around February the 19th. So when you see an exact 6-month anniversary of that, which hits in August, it also lines up with a 1-year cycle and also a 3-month cycle. For me, that has importance, and you really should pay attention to it.
Okay, Mark, since you know a little bit about Gann, and I'm an amateur, do you know why Gann watched planetary oppositions? We have one today. It's with Saturn. Would you happen to know why he felt those were important days to watch?
Well, that probably goes beyond, the focus of our little chat here. That I could talk about this for a couple hours, and I don't know how much.
Okay. How about a cliff note? How about a cliff note answer? Did he see them as inflection points? All I would say to you on that is that it's important when you find sun and moon and smaller planet interactions to the larger pairs. Those have a much higher chance of causing a change of trend than when you just look at the longer term planetary interactions on their own. Okay.
So,
thank you.
Just to give you a quick 30 seconds, and I don't use a lot of my analysis based on this, but I have obviously read a lot about it. So, the period between 22 and 26 degrees Capricorn is exactly where a lot of major planets were in the middle part of February. There's also a huge eclipse, which, Mars passed over that one day before the market peaked in February. So the sun is actually exactly opposite to that as of this time right now. So there is, to some extent, a lot of energy specifically based on that for those that care. I've always thought that natal charts
Good caveat. Yeah.
Yes,
I know that. They think I'm a lunatic, buddy. Anyway, so
I'll
yeah,
mention to you that the major eclipse that happened right before 9/11 happened in June, and Mars hit the degree of the eclipse right on the 10th of September. And the same thing happened right and when the market peaked in February. And there is some significance to that for people that care. But
well, thanks for going public and
Look,
being esoteric.
my work is based on technical analysis. It's not largely astro based, but I do obviously, I'm very willing to accept alternative methods that help me to square the larger areas and or cycles, which I feel can be important. So I'll leave it at that.
Okay. Do you think we're on the verge of a major breakdown in the dollar, or are people turning bearish a dollar a little bit late in the move?
Oh, I don't think it's late in the move. I think it's. I think the dollar peaked out, the latter part of 2016, and I think that last week's close was the lowest level we've seen since the middle part of last year. So on a daily chart, you're certainly still seeing the evidence in the last month of dollar starting to break down. This does seem to be sort of an important technical point where things could have some importance. If you look at some of the 8-year cycles that rule currencies, the dollar should be on a pretty straight line lower over the next couple of years. And so, I view this as being, it is going to be important. I'm not sure that we get down under March lows right away in the Dixie. And so if the dollar gets down a little bit lower in the next few weeks, that could be a chance where we start to stall out a little bit. But, I look at the charts of pound sterling, for example, today as actually being pretty bullish. The Euros chart to me still looks, and granted, this is a weekly chart, which is still a little bit of a concern, but we're coming upon a pretty pivotal time for sterling and really a make or break, because many people that study technicals realize that, when you do reach the apex of these triangle, it can be important. And so my thinking is if you get up above 126.70, you could have a very strong move to the upside, which would cause a larger, likely a move up to the mid 130s. And that's a larger area for that.
So are you in the camp that a weaker dollar actually stimulates risk? And so if we're talking about the dollar possibly breaking down, that's what gives the market legs into late August?
I think they're all in their different cycles. You saw the dollar breaking down throughout 2017. It really didn't have that much effect in my view. And I think that various dollar cycles, the period of dollar gains in 2014 to 16 actually were arguably, let's just leave it at that. I think the cycles really are very different. So I'm not certain that a big breakdown in the dollar has to be all that negative for U.S. stocks. I mean, most of them have, most of my work suggests that the dollar should, though, be getting weaker in the months to come. And that might be something to pay attention to.
Okay, and with gold having on the verge of pressing a new high and silver making new highs, still runway left, or could the peak in the market in August be negative for the metals as well as it was in February and March, where you had a liquidation break and metals came off with the market?
I mean, seasonally speaking, gold remains in a very positive time, and as many viewers know, when the dollar and when rates start to turn down, it tends to be specifically very bullish for the metals. So, I don't have this urge of trying to fight the trend and pick the top. I think that the move right now is still bullish and it can still continue. I think, specifically the move what's happening today in silver is very good. And it's actually been gaining a bit on gold. And, for me, that's a good sign. I think that when gold moves and silver does not confirm, that you tend to see, that divergence can be problematic. But I see when you look at CFTC data on futures, that's actually pulled back a bit. It's not as bullish as it was. And we've seen a very good breakout in silver. So I think silver gets up to the highest level we've seen since 2016. So that would be, right around 21.5. And that likely is going to represent, for many people that look at Elliott, potentially the highs of this first move off the lows. And then we're probably going to have to consolidate a bit. But for me, it's tough to make this move from March and April into a 5-wave. It's very so. I don't know what to think. I just think that it is a pretty clean. It appears to be a 5-wave move, and I certainly would want to sell into that on strength this fall, and then look at buying dips. But I don't have any need to go against the metal trade, given my broader thoughts on the commodity space, which I feel is going to really take center stage next year.
Okay.
So commodities have had
grain starting to come out of the hole too. Copper doing well. PM's
yeah, that's
doing
interesting.
well.
The CCI for the equal weighted commodity index, and this lies at a pretty critical level right here. So it wouldn't take much for this to get back up above the lows from 2019, 17, and really could show some further rallies, and so that's sort of interesting.
Buy sugar.
Copper has been certainly a lot stronger than many people have given it credit for, and I think that you're up against, the 300 level does tend to have some importance. You've gotten a bit stretched, and so for those that look at the longer term charts of copper,
it's bullish.
We'll see. I think as a barometer of the economy, to have copper as strong, I think that you could argue that we're in for a little bit of a pullback. We've had a very decent run, and we'll see if this area is important or not. I don't see us moving all the way back to prior highs. I think we're going to have a very, very decent pullback to buy into.
Anything in energy that's had, it's been pretty binary, hasn't it, Mark? I mean, everything crashed together into the March low, and everything's kind of recovered together. Just a difference of magnitudes of the recovery. Wondering what you're thinking here in crude, which also recovered.
Yeah, I don't love crude oil. I think that we've at least short term, I don't have a real strong directional opinion right now on WTI, but I think increasingly you're seeing peaks be made on lower and lower momentum. And so, for me, that is certainly, that's we'll see. If we take out 38.5, which were the lows from back on the 10th, then I think you could argue that a pretty decent top is in on crude and we start to pull back. But, we have had a fair degree of strength for about 2 months. It now has leveled off, and we've seen some sideways trading. Bigger picture, I think you could argue that we're up against, at least on generic charts, we're up at, levels that do have some significance. And
between here and 42, I think.
Yeah, so I mean, I look at this as being, we're heading into a seasonally,
there's a gap there.
Sort of a weak period of for crude, and so I can see a good likelihood of weakness, I think, in the months to come.
Is it possible to have a view on yields here, Mark, with the charts looking like an EKG of someone in a coma? There it is.
Yeah, so I'm not all that optimistic yet that yields are bottoming. I still think that we likely are going to pull back and test the lows near 54 bips. It's striking to me that we do have a pretty positive amount of correlation between yields and stocks over the last year. I think it's around, the R is like 57 or so, which is crazy because yields actually have been pretty flat and down since you notice that yields and stocks all peaked around the first part of June, and that on an equal weighted basis, stocks are down 10%. And most people would say, well, the NASDAQ's at new highs and everything's fine. But yet, yields have not been acting well, and stocks also have not been, unless you're in large cap technology.
Right.
So the growth to value trade has been sort of cracked. And I think that yields, until you get up over levels near 70 bips for me, then, I think the odds are that we're going to see further weakness in yields.
Anything else you want to cover here today, buddy?
The growth value thing is something that needs to be stressed, because this is, it's been something that, finally we saw some evidence of growth starting to break down versus value, and it is short term in nature thus far, but we are seeing just an amazing amount of rotation out of large cap tech in the last week that has really not been seen all year. And so, sentiment is something that's really interesting, and many people have argued that sentiment is overly speculative and that,
Robinhood traders,
Yeah, but I still don't see things as overly bullish. I think that the average individual person is not nearly as optimistic as the institutions have been forced to be, having with the market moving up and they're forced to participate. But when you look at, I still find the AAII data to be, really interesting. And I tend to think when that lines up, when the retail trader lines up with institutions, and that's when you find the bigger turn. And so I don't, we still have about 14 to 15 percentage points of spread between bulls and bears, where the bears right now are still greater than the bulls. And whether that be COVID cases not able to be contained and just fear, race riots, whatever you want to say, there's just an incredible amount of unrest right now that doesn't strike me to be overly bullish. And so, I do think that low put to call ratios are a temporary problem. I mean, you have seen the 10-day of the put to call, I think, get down at the lowest level we've ever seen. And so for me, that's, that is interesting. When you see levels in the mid 40s on put to call, that's just not something you typically want to chase rallies in, particularly when S&P is right up near, former highs. And we've seen technology, which is 27% of the market. Now that's starting to falter.
Yeah, and that's been your narrative for the last year or so. We're not going to see any weakness in the market until tech rolls over. So we've just seen the first crack, right?
We've seen a crack, and the question is this a larger crack or does it recover again? And right now, I'm just, I don't see enough to think that, it's anything more than just a temporary crack, and maybe I'll be proven wrong, but I am expecting at least a temporary peak starting in late August, in September and October in equities and most risk assets. And then I think, for me, the market has rallied a lot further than many have expected, myself also for that regard, without any sort of meaningful pullback. There were a few things that we saw in January, February that suggested stocks can peak, and now we've rallied, but the rally has been very, very strong from a price perspective. But yet we're still seeing meaningful weakness in small caps, mid caps. So I think we have a temporary pullback in the months in September, October, and then the market likely is going to push back to new highs, and then we can peak out again, probably towards the middle to the end of December. I do think that January, February are going to be a very interesting time, to say the least, and it's going to pay to take money off the table heading into the first part of next year. So I do think next year can be a down year.
Any view on the election?
I think if COVID can be kept under control, then it can be a tighter race. I think the Democrats have made some strides only because of Trump's being viewed as having had probably not as effective leadership and a little bit more divisive. But I think that in general, if it can be a split house, then, I would certainly be a little more happy than seeing probably a clean sweep that really takes away a lot of the regulations that most of us small business owners have been accustomed to. So, it's an interesting race. It's going to be, two 70-plus-year-old white men with at least early signs of cognitive degeneration that makes it really fascinating for me. I don't like either side, and I'm just hopeful that it doesn't get pushed. I think if the election were to be held now in November, that Biden probably wins. I think if there's any chance of it being postponed, which Trump certainly has the power to do, and he's come out and said, given his view of the ballots, mail-in ballots being fraudulent, that if he fights it and pushes out till January, then I think all bets are off, and there's a realistic chance that he's
okay. You're the first person that I've heard say that publicly. I've been thinking. I mean, there are actually. Don't you think there's some cover behind the social unrest and COVID really not settling down during the summer, and it's going to be very confusing with the flu season, that there'd be enough cover to say the election's postponed, maybe put out some more of those federal troops. And
I'll say this.
The market is thinking about that.
I think that the civil unrest is something that has to be gotten under control. And I think it's always tough to know what to believe about the virus, and it's gotten very political. And I don't necessarily like to speak one way or the other because of the political views. I think that everybody's hopeful that we're all safe. I think the virus is going to be kept under control, I think, we're doing the right things now to open slowly and gradually, and people are taking this a little bit, arguably more seriously. It depends on where you live, but I'm in favor of an opening up, but doing it cautiously. And I think we will, if we do that, we can have a flat line. We can have a.
Are you going to restaurants with your family?
We've done a lot of takeout. I have gone to open air restaurants and eaten outside. All right. We are all negative at this time. So if we can do so in a safe manner, then I'm in favor of that. And so I think that I'll say this about the election, and this is really the most important point, and there's no other reason to argue either side. If the economy falters during an election year and it's bad, there's never been a time when the incumbent has won. And so that's going to be important, is to see further signs of economic progress and rebounds, and get some sort of a vaccine sometime this fall, which is really, really important to the GOP. It can't be put off till next year. And that would be, if we can get it under control, then I think that really helps at least the perception that the economy is going to get better. We all know that, we're in the biggest time of distress we've seen in 90 years, and that we have a V-shaped recovery in the market that really is out of touch with what the economy is showing. And the economy likely is not going to come back. There's going to be people that are just scared to do anything. And so that's going to prohibit a full recovery that I think the economy is going to be in dire straits as of next year, personally.
Okay, Mark, you want to show people where they could find your stuff, your content, your commentary, show your website?
Yeah, so I started my own business 4 years ago to provide technical analysis to institutions and individuals, and you can visit newtonadvisor.com, and I'm on Twitter as Mark Newton CMT, and I put out daily videos. We have a weekly webinar every Thursday, and I put out content twice a day. I have a focus list that I run, my favorite longs and shorts, it's included. And if you'd like a trial, go to newtonadvisor.com/trial. I'm happy to sign you on for a couple weeks to see if it'll be a fit for your business.
Thank you, Mark, for coming here, edifying us and sharing your insights, and always learn something from you every time you come.
Thanks, Dale. Yeah, it's great being with you guys, and have a wonderful, rest of the month
we'll
of July.
set something up for the fall. See how this August thing plays out. So
that sounds great.
I'll get a hold of you. I'll get a hold of you after the interview, Mark. Thank you very
much.
Dale.
Take care. Yep,
all right, everyone. That's gonna be a wrap. I'll see everyone for Turnaround Tuesday. Let me just look here for a second. So silver's making a new high. Gold's still $3 under the high. Interesting. Anyway, unless it's this. Okay. All right. So let me just tell everyone that you're very welcome. Kuldeep, Monica, you're welcome. Kirk, we'll be talking to you tomorrow. And that's a wrap. Don't just count your pips, count your blessings. Adios. See everyone for Turnaround Tuesday. I think there's going to be some nice counter trend scalps to look at. So see you tomorrow.